This is our Forex blog for January 19th, 2012. And like we do most days, we want to buy the strongest pairs versus the weak and sell the weakest versus the strong. On the top, we have the real-time histogram, which measures each currency compared to all the rest using 5 of our best statistical tools. 3 of them measure the direction each is moving versus all the rest, the percentage that are going up or down. And the other 2 measure the intermediate time frame intensity and the bar-by-bar statistical intensity. And so anytime you have the majority of dollar pairs, or in this case yen pairs, going down and doing so with incredible intensity, that's a trend that's very likely to continue. What adds to that probability of that trend going down is if the daily trend's also down, which it is here. What adds slightly more momentum and probability of it going down is when the weekly trend's down. And the monthly trends shown on here, it doesn't really have much impact for intraday trading, but you can trade a little bit more lots, maybe 10 to 20% more lots, if all the time frames line up. So here we have the euro, one of the strongest currencies today, and one of my favorite patterns is to find a momentum move that's up and at and above the 80 level for usually 30 minutes to an hour and a half, 2 hours. This one is an hour. The daily trend's very strong up. It had one of the strongest daily trends today. It pretty much was going up today against every other pair. And the weekly trend also shifted up. The monthly trend's down, but like I said in the beginning, it doesn't matter as much. And you usually will miss the first move of any trend if you're really trying to be conservative, trying to trade as safe as you possibly can. You're always going to have losing trades, but you want to keep them small, 6 to 12 pips max, and you want your wins to be 10 to 50 pips or more in some cases. So when you see a high momentum move up, followed by very little amounts of weakness, and I prefer visually half the weakness here, and you can see there was 3 5-minute bars, 15 minutes of almost no weakness at all, 1 bar of a little bit of weakness, and then the strength resumed. Because the previous momentum was so strong, at 5, that trend's likely to continue, and it really briefly goes up, and then for 10 minutes it has an intense move up, just pretty much sideways move for 20 minutes, and then it explodes up again. So coming up to 5 right here, you don't want to find a currency that's extremely weak. You have that in the yen. Extreme weakness followed by, like I said, half the strength visually. And, coming up to 5, it's very little amounts of strength. The daily and weekly are down. So the euro-yen coming up to 5 would be a good one to be looking to buy. Let's scroll forward on by hitting the plus key on here. You have your pullback on this chart right here. It's and you can tell by the same exact tool using both currencies. There's 13 currencies compared right here. A lot of momentum on the way up, very little weakness on the way down. It breaks that trend line. You're long right here at 87. I would put my stop pip or 2 underneath the low, so you got about a 12 pip stop here. And notice where our trailing stop got you out up here at 17. You're in this, let's just round up to 90. You made 27 pips while risking 10 or 12. And these are my Fibonacci areas I draw each night. Usually when they're above the white 2.0 containment band, that's the end of the move, and you should get a deeper pullback. When the market hits those and goes sideways like this, obviously it's awaiting a news announcement, and when that happens, when you get a multi-hour breakout like this, usually those tend to trend. You always want to draw your fibs on the last move up, and this is your profit target, 54. If you bought this at 30, you have a good chance of making 24 pips while risking about 10. So that's for new traders, you should only take trades that have a 2 times likely bigger profit target than your risk. For experienced traders, 1.5 is fine, because you'll typically have more wins and you don't need huge wins to get back your losses because you have far fewer of them and tinier ones. But in this case, when it broke out, notice our trailing stop. When the market is up too much, we have a super tight stop, and you can see it got you all the way out here at 94. In this trade around 30, and you made 64 pips on there while risking 10. So while you initially expected a 24 pip profit, in this case, it gave you 2.5 times that amount. Sometimes you have a likely profit and you end up with a loss. Sometimes you have a trade that's up 5 or 6 pips, and then it comes down and stops you out. The trailing stop has moved up, and you only have a 6 pip loss. But nonetheless, you want to have small losses, big wins, and the currency meter showed that the euro was the one to be looking for. And notice right before that breakout, there was about an hour and a half of weakness, and then almost no weakness anymore from 10:30 here. Notice 10:30, the weakness disappeared on the euro itself. Boom, explosive move. Same exact thing, with the euro yen as well. Actually, that's what the one we were looking at. Let's look at the euro dollar. The yen was weaker today than the euro yen, and so you can see it's above the hourly right here. This is a decent trade. Nice little pullback. Nice little pullback. When the markets get above the upper containment band, unless you have incredible strength like this, usually it kind of runs out of steam. And a lot of times the market will do a two-wave pullback, which if you draw your fibs on the first wave, it's relatively safe to buy somewhere between the first 1.382 and second 1.618 fib target. In this case, you also have the previous week's high. Any resistance area, once broken, becomes support. So that adds to your probability. You have the hourly moving average there, and you have the 20-day moving average there as well, and the 1.618. So there's 1, 2, 3, 4, 5 support areas. So this was probably 70% in my opinion, likely to cause some kind of a move up. Now, if you're a scalper, you can always get into these trades right here, and look at our trailing stop. Got you out right here. Most of the time, the market runs out of steam at and slightly above the 2.0 band. We also have a counter trend signal right here. The big yellow ones are very high probability reversals, and this is a 5-minute chart I'm showing for illustrative purposes. I typically use range charts. So for those who like to scalp, it came down to that area. You wait for one green bar and you buy it when it goes 1 pip above it. Because this is a 6 pips per bar chart, you put your stop 1 or 2 pips underneath there, your risk is always less than 10 pips. And notice how this resistance area kind of ran out of steam right there. Typically, the whole number as well. You can see it went up without that much strength, and the weakness on the way down was quite a bit more. So above the hourly, we're focusing on buying. So more than likely, I would have got out of half my trade here at 2,900 and then put my stop underneath here and had a very tiny profit on that one. And then you got a 3-bar pullback. Oftentimes, after 3 to 5 bar red bar pullbacks, you wait for 1 green bar and then you buy it when it goes 1 pip above there, again with a very, very tight stop. You're expecting this whole number again to be resistance. It shot through it. This is the next resistance area. And then the next resistance area is, one of our upper containment bands. There's nothing, once it gets above this monthly pivot level here, there's nothing to stop it. Counter trend sell signal right here. At the same time, the momentum is slowing down here, as you can see. Let's scroll this over. If you're in a trade and the momentum is starting to slow down, you can watch this on the next bar and, maybe get out of half your trade here at 32. I oftentimes, when I see a bunch of bars with a similar low, put my stop underneath the low. I'm going to give back 5 or 6 pips of profit. Hopefully it shoots up another 10 or 20 pips. If it doesn't, I'd be out somewhere around 1.2928. But this is a very big 38 pip win while risking 6 pips, which is a number of pips per bar, plus 1 or 2 pips padding plus the spread. I obviously trade with an ECN type broker, so in the euro dollar, I oftentimes have half pip stop, half pip spread plus the commission and everything. So usually about 1 pip, 1.25 pip. So by having a 1 pip padding on here plus the other one, typically my losses in this case are about 8 pips.